Good morning. It is January 27th. We are about 30 minutes before the stock market opens, and this is a live stream to talk about the stock market, talk about individual stocks, and everything affecting stock prices this week. We're going to look at fundamentals of companies, try to value those companies. We're also going to look at the technical charts, and that will be done by Daryl. How you doing this morning, Daryl?
I'm doing wonderful, Victor. It's good to be here. Got lots of snow on the ground and it's cold.
Yeah, a lot of snow on the ground for a good part of the US. So all things are good and safe and warm for you right now.
Yep, we haven't lost power, so that's the most critical things. We have an all electric home, so when we lose power, that can be pretty dangerous, but we haven't lost power yet, so I'm really thankful for that. We're doing well.
Good to hear. And with regards to the storm, are we past the worst parts of it, or are there any more is there any more weather coming, any more snow or ice coming?
Supposedly this weekend, another really big cold blast is coming to my area. But I don't think we have any more big storms. They pass for the most part here in Arkansas.
Very good. Very good. My fingers are crossed for you, and hopefully things get a lot better
Yep.
and no more major, you know, uh, snow or ice storms are headed your way. All right. So, with regards to the stock market, the futures look pretty mellow. It's Monday. It's Monday before big earnings. This week, it's all about earnings. We've gotten to the point where it's a little bit like the Super Bowl. The Super Bowl is going to be in 2 weeks, and the Seattle Seahawks, I believe, are the favorite against the New England Patriots, and it's going to be a big event. And like that, this week has big companies announcing, and they're going to really move the market. We have tomorrow, we have United Healthcare. I believe they're on a rebound. If they announce that the business is being, I would say, improved, repaired, fixed, I think that stock can continue to rally. It's had a nice couple of week rally, and I think it can continue. It's a real discounted stock. We've got RTX, a big industrial stock that's in the aerospace and defense space. I think you've covered RTX, right?
Yep, I just released a video on them this morning.
Excellent. Yeah, this is a stock that's received a lot of investment. It is a very, very widely held stock. Next one, Boeing. Boeing's going to announce tomorrow. NextEra Energy. These are pretty good caps. These are 176 billion with regards to NextEra, Texas Instruments, Union Pacific, HCA Healthcare, Northrop, another industrial aerospace and defense company, United Parcel Service. I like looking at United Parcel Service and FedEx. I think it gives me kind of a point of view into the economy because if UPS is shipping a lot of parcels, to me, that's a barometer for the economy. So I'll be curious to see if UPS continues to grow their business and really get their strong footing now that Amazon is taking a lot of their own deliveries on and moving some of those volumes away from UPS and FedEx. So we'll see how UPS announces. Seagate has been on a tear. Will they continue to sell their storage like it's, an absolute necessity? I think it's a short-lived, situation. I think that they are flourishing, they're making lots of money, good for them. But I just don't see it that it's going to last forever. General Motors is going to announce, and so just a lot of news. I would say this week we're going to have a couple hundred earnings and lots of big ones. So that's kind of the warm up. This is kind of like, okay, get ready for the next day because the next day is massive. Microsoft announcing on Wednesday, and that one is going to move the market. What they say, especially around the data center, Are they investing more in the data center? Are they spending more money on semiconductors? And most importantly, are they growing their business? How are they growing their whole AI Copilot business? From what I've heard, Copilot's not been a successful product line to this point. It's been a real big marketing event, but I think users of Copilot are not getting the value that somewhat is promised, right? Like, oh, I could open up a Word document and it creates a letter for me. All right. Open up an email and voila, types up an email for me. No, it's not, hasn't been able to do any of that. Hasn't been able to create a presentation. Like, hey, here's a bunch of information. Create a PowerPoint presentation for me. Nope. It's falling short of that too. So it's kind of a button that you see that, and when it comes to software, users, if they go to that button, 4, 5, 6, 7 times, and on those occasions it was a waste of time, they stop clicking the button. They're like, okay, that's a waste of time. I'm not going to touch it. So I'm just hearing some concerns around Copilot. I think investors are really going to zoom in on that and say, what's going on there? And the Microsoft stock has not been performing all that well. I think it did well in 24. 25 wasn't a good year. 26, we'll see what they have. Let's see what they have to impress the market, if they're able to impress the market. Meta is a stock that was sent to the principal's office after their last earnings report because they were spending too much money in that data center, and they were somewhat oblivious to the fact that, hey, investors do keep an eye on free cash flow, and investors were not happy with the level of capital being deployed to the data center. So Zuckerberg and the leadership of Meta pivoted. They said, you know what? We're not going to spend as much money in that data center. We are going to do more with less. We're scaling back our capital. And I think if they follow up on that message, Meta's going to be all right. Meta stock has been rallying for about a week, maybe a little longer. It's been on a really strong rally last couple of days. And that's a good sign as we head into their earnings. What's your opinion there, Daryl? If you see a stock kind of rally into the earnings versus sell off into the earnings, do you see anything that, or is it kind of like, you know what, let's just wait for the numbers and then we'll see what we got?
I think it's a little bit of wait for the numbers. I do look, and I reported in my earnings previews whether they're showing relative strength or not. But it doesn't always play out that way. So Intel was one that ran up into earnings. I don't know how much they were up last week, but I took a completely contrarian view on them. Let me see what they did yesterday rather. Okay, I'm in the wrong tab. I need to go to this tab. Let's go to Intel. As you can see, they ran up heavy into earnings. So you would have thought that this would have been that, whisper numbers were coming out and they were going to blow out earnings. But I took a completely contrarian view and bought a bearish put spread on them. And you can see what they did, and it paid off, gave me about $600 or so on that in a couple of days. So they were showing great relative strength. They were, overbought, RSI above 70, PPO showing pretty strong numbers and, growing. So they don't always play out like that. I do keep an eye on them, but they don't always play out like that.
Yeah, good example. And yeah, Intel really, man, I don't know where the stock's going to go from here.
I do.
Very good example. Um, Tesla's going to announce on Wednesday, and I just don't know what to say about Tesla. Tesla is, like that stock that defies gravity. It's not priced on fundamentals. I think most investors could agree to that. But hey, you don't price Tesla on their income statement or their statement of cash flows. No, don't make that mistake. Don't look at how much money they're making. Don't look at their sales growth, because you really got to either buy in or buy out of their vision. And that's what that earnings is going to be about, is their CEO, the visionary, selling his vision and seeing how many investors will buy into his vision. And frankly, a lot of investors do buy into Tesla. $1.49 trillion in market cap. That's a lot of people buying in, drinking the Kool-Aid, and we'll see what happens there. I'm going to be a spectator. I don't invest in Tesla. It's not in my investing plan, philosophy, recipe for success. It's just not. It's not the stock that's right for me. I wasn't a Tesla investor 15 years ago, 10 years ago, and it was successful, made some money. But after that, it just became kind of just too expensive. ASML, this is an important semiconductor machinery company. It has really done well. I think it's up like 70, 80% over the 1 year. And we'll see what they announce. They didn't have very good growth in the last quarter, but maybe this quarter they're going to announce some growth. Lamb Research had done really well. It's done really well for the last 2 years. And again, I think these stocks will trade up or down based on Microsoft, in fact, because Microsoft really can influence the semiconductor space with their comments around the data center. Are they seen like pedal to the metal? I mean, 2 years ago, these companies were like pedal to the metal. You got to buy as many GPUs and put them in your data centers as soon as possible. We got to build data centers as fast as possible. And now what's going to be their tune? So we'll see. That's one of the big stories that is going to the narrative of these big companies over the next 2-3 weeks. That's going to move the market. If there is a narrative that, hey, we're gonna control spend in the data center, we should see a big sell-off in semiconductor. If they say no, pedal to the metal, keep going, this thing is going to change the world, well, then maybe we keep rallying higher. IBM announces on Wednesday. And as you guys could tell, I mean, I typically don't go over earnings and stay this long on earnings, but geez, we got like just big company after big company. We got GE Vernova, AT&T for those dividend investors. And AT&T's been a winning stock. I think you're in AT&T, right, Daryl?
I am. It's been a little challenging here the last few months, but they were doing really well earlier in the year, last year, but it's kind of lost some steam here recently.
Interesting. Well, we'll see what they announce and see if that gets them back on an appreciation track. ServiceNow, I'm really interested in looking at these software stocks that have been beaten down, just taken out with last week's garbage. Don't want them anymore. It's like a remodel, right? You got perfectly good cabinets in the kitchen, but they're just not in style anymore. So you rip out the old cabinets and you put in some new cabinets, and it's going to be better, but you did rip out some good value. And when it comes to ServiceNow and other software stocks, there's a ton of value there. If it's proven that AI, one way or the other, if AI proves we're going to take seats away from ServiceNow, Salesforce, Adobe, go down the list of software stocks, then the market's right. It should be selling off software stocks. But If that theory is proven to be wrong, and ServiceNow keeps growing as they have been, they show that, hey, we're growing the number of licenses and seats. And we actually have a new product line of AI products that's growing quite well. Value is value. Over the long term, the weight of free cash flows, the weight of profits, the weight of that revenue growth, that's the value of this enterprise. So this could either be a real big opportunity within software, or it could be a massive lesson to this investor that, hey, the market was right all along. Software stocks are now less important, less valuable. So we'll see if I'm going to be taught a lesson or if this is going to be a good investing idea. Progressive, they've been kind of Progressive for about a 4-year run, was like the star of the show within insurance, just doing great. But over the last year, they've kind of hit tough times. Like their stock hasn't performed all that great, but they have been making the changes, making the adjustments that I think could put them back on track. Starbucks, I don't have a lot to say there. Don't like the stock, don't like the business, but I don't even, I'll drink their coffee, but it's not my favorite. So let's just move on from Starbucks. ADP, I got earnings coming out of my ears. We got Waste Management. They're a nice, stable stock. Elevance, which is a lot like United Healthcare, they're going to announce. United Rentals. I also like looking at United Rentals because it tells me more about the economy. If United Rentals is renting a lot of equipment, that means the construction and the services space is doing really well. So it's worth taking a look at United Rentals. Hey, are they growing? What's their forecast? Do they see a lot of growth? So a lot of good stuff coming out. This week is going to set the table for where the market is going to go. And then on Thursday, we got Apple, big giant market cap. And one thing that, Apple either is a cool operator and has kind of avoided a lot of these, big storylines that could either make or break you. For example, AI. They didn't invest big in AI. And it's either going to be a genius move or it's going to be a you're way behind move. Right now, I'm thinking they was probably smart because now they can pick whoever is the winner. Like they pick Gemini as their AI platform to be used on that iPhone. So they kind of waited to see, okay, who's going to be the leader of the pack? Where could we partner or buy into AI and put it into our ecosystem within that iPhone ecosystem and make that work? So I have to hand it to Apple that maybe that was a very good chess move that they decided on, but we will see. It'll be interesting to see. And they've also been growing, by the way. It is a massive business. It's a humongous business, and they've been growing. So we'll see where Apple goes on Thursday. Visa, MasterCard have been kind of pushed back a little bit. The government wants to put a limit on the interest rate charged on credit cards, and that could lessen the number of issuers of credit cards that don't see the kind of ROI that they would like to see. That put a little bit of pressure on Visa and MasterCard. Caterpillar, big industrial. SAP, big software company. Thermo Fisher, med device, scientific equipment device company. And I think it's more scientific equipment company than med device. Blackstone, Honeywell, Lockheed, another big aerospace and defense company. Stryker, that is a health equipment company. Parker Hannifin. So we are going to have earnings coming out of our ears, and we can't take Friday off because Friday morning is the big oil and gas energy morning. This is typical. Exxon and Chevron, the two amigos, the two biggest energy companies in the market, announce on Friday. And these guys have been having a decent year with oil prices going up, some news around Venezuela. Russia's still kind of in the penalty box. Iran, there's geopolitical tension there. So that type of anxiety drives up oil prices and it helps Exxon and Chevron. So we'll see what they announce. And then American Express, that's an important company. And so is Visa, MasterCard, American Express. If they're growing really fast, that's a good thing for the economy. Or I should say, that shows that the economy is doing well. Mitsubishi, Verizon, AT&T announces earlier in the week, Regeneron, and Colgate-Palmolive. Nice stable stock. So we got a big week ahead of us, guys. So that's what's going on the earnings front. Obviously, it's humongous.
The good thing about these companies announcing their earnings is they've been in a lockup period about 10 days before where they were doing any buybacks, they halt their buybacks. But after they do earnings, buybacks will start coming back. So that window will start opening back up. So if that's been affecting the market in any way, because buybacks are probably at a minimum right now, those should start opening up as these companies report.
All right. And I've got a follow-up topic. It's somewhat related, but different. So we're in the era of massive index investing. The S&P 500 index being one of the biggest indexes that people invest in. And how does that affect the market? Like, at what point do those index ETFs and funds reset? And as an example, hey, NVIDIA stock went up, so I have to buy more NVIDIA shares. When does that happen?
By the index funds?
Yeah. When did they rebalance? Now,
I think they almost have to do that on a real-time basis, don't they?
Well, let's ask Gemini.
Okay, because I think it kind of mirrors the daily trades.
All right, Gemini. Gemini's been doing a nice job. All right, index funds rebalance their stock holdings on a predetermined schedule established by the index provider. So I guess each index says it like, hey, we're going to do it quarterly. We're going to do it semi-annually. The exact dates are publicly announced in advance to ensure transparency and manage market impact. So the S&P 500 rebalancing occurs quarterly on the third Friday of March, June, September, December. So it looks like at least the announcement happens third Friday of March. So we could see that, whatever stock is headed higher going into late March, you're expecting, hey, it's going to get an extra push forward or push higher, because it's going to have a lot of these index funds that are going to index off the S&P 500 are going to have to buy more shares. And the reverse of that, if you have a stock that's been falling, it's an additional push down. It's like, hey, sorry, guys, you're going to go down even further. So interesting.
Well, that third Friday of those months is also futures expiration, monthly expiration, weekly expiration. That's the quadruple witching Fridays.
Mm-hmm.
So that lines up with those.
Got it. All right. So we got through like the opening here. We're market isn't open yet. I had a couple of stocks in mind that I wanted to go over. And if you're a member out there, you want us to look at a stock, you know the drill. Put the stock in the chat. We'll take a look at it. We'll probably do a full valuation on it, get to a value. Daryl can look at the charts. We'll see what's going on. Looks like Tomas is on. Tomas, good to see your name. Between Adobe and Salesforce, which would I buy today? Man, I love Tomas's question. He always puts me in this zone of, okay, you got to pick one or the other. I remember times when he said Meta or Google. I forgot when. I had to answer the tough question. He might be an attorney. You know how attorneys put you on the witness stand and you're like, were you there the night of, so-and-so date? Where were you? No, I have an alibi, Your Honor. Okay, so let's take a look at the two. They're both discounted. Which would I buy if I can only buy one or the other? Man, it's a tough one. Let's look at it closely here. Salesforce, its stock is down. And when I look at their growth, 8.4%, the quarterly, 8 points. And when we look at the forecast for Salesforce, so we got analysts saying discounted, it's discounted. And what I like seeing about Salesforce, okay, they got a fiscal year that's going to end, it looks like at the end of this week is their fiscal year is going to end. And they're supposed to deliver 10.5% growth. Next year, which is going to start February 1st, is going to deliver 11% growth, 9%. These are good growth numbers because they're a big, big company. And $46.5 billion, that's a big software company. Okay, so I got that. Now let's take a look at Adobe. All right, so Adobe is growing at 10.5, which is better than Salesforce. It is smaller. It's almost half the size of Salesforce. So Salesforce should be given credit for growing such a big company, right? Big company growing at 10%. Good job. Good job. Quarterly. So where AI is taking away licenses, not seeing it yet. And AI has been out for 3 years. It's not like, hey man, it's been out 3 weeks. It's been out 3 months. Give it some time. Hey, you got 3 years to prove that AI is taking seats away from Adobe. Hasn't happened. It has not happened yet. So let's take a look at this forecast. Well, I'll go back to the Salesforce forecast, but I think you guys can remember it with me. We're in this year here. This year is going to end November 28, 2026. They're growing at 11.7. That looks good. This year, they put up that number. That's acceleration of growth, especially if they announce, hey, we're growing that AI business we've been telling you about. So that's interesting. And the growth in profit is really expanding, and it's also going to expand. Now, the future growth is not as good as Salesforce. Salesforce is really bringing it. If you recall here, the longer term, and this is a company that's twice as big as Adobe, and look at this sales growth. So I like them both. But if Tomas has got me on the witness stand and this is a binary decision, I'm going with Salesforce. That's my opinion. What do you think, Daryl? What do you think between these two software giants? Which one, if you had to pick one or the other, which one would you go with?
Well, that's a really good question, but I think CRM at the moment.
Yep. Again, I like them both. But that's your answer, Tomas. Man, the stress that Tomas puts me under. And I'm just kidding, of course. Thank you for the question, sir. DJ, good to see you. TDD. This is a good entry point or wait for earnings. TDD, is that, what is TDD?
Isn't that the trade
TTD.
desk?
The trade desk. All right. So these guys have been under pressure, right? Yeah. And the trade desk competes with AppLovin. They compete against Zeta. And I think the reason for the sell-off is this deceleration of revenue. And they're a small company, okay? They're not tiny, but they're not big. So this is what I think investors are keeping an eye on and saying, well, if you start decelerating, that means that you're not competing well enough against AppLovin. You're not taking good market share and making it, your customer base. So that's a big concern. When do they announce? February 11th. So we're about 2.5 weeks from that happening. If we look at their forecast, let's take a look. We are operating in fiscal year 2026. They follow a calendar. And the forecast looks like, they are going to begin to grow at about a 16 down to 15% growth rate. That is very good. The P ratio is dropping. So this is a good long-term stock, but I would wait for earnings. Me personally, the growth has been contracting, or I should say slowing down, not contracting. Revenue growth tells me, is trade desk competitive? Are they, taking it to AppLovin? Are they taking it to the competitors in their market? And if you see a slowing growth rate, that means that, hey, you're not growing fast enough. AppLovin's growing faster. So I would wait. I want to hear from management. I want to see some sales information. Are you re-accelerating your revenue growth? If you are, I'm a buyer. If you're not, you're still in that zone of indecision. Like, I don't know what's going to happen to your stock, but I just can't have my capital in a stock where I'm not or I should say I'm not confident in the business. You're never 100% sure, right? This is stock investing. This is not super easy. So my response would be, I would wait. It's just the news that we have been seeing in the stock is one where I just need them to validate that they're beginning to grow. Any comments on the trade desk, Daryl?
Yeah, they're definitely in a decline at the moment. So the last time we looked at this, we had these two trend lines. I just extended them out, and they're trading below a 200-day. The rate of change on that is getting smaller, so that's better news than what we had back here. The 50-day is still declining. Okay. They're trading below a 20-day, which is also declining. Their RSI is below 50. PPO is in bearish territory. Money flow has spent this entire year almost in negative territory. So this one needs to have a bearish to bullish reversal before I could get too terribly interested in it.
Yeah, I think the company either has to give us evidence that they're turning the ship around or making a positive impact on that revenue growth, or give us evidence that the market was correct. Your business is not growing fast enough because your competition is either doing a better job, has a better service, has a better product. That's what that top line tells me. So that's what I'm seeing. Nicely done, sir. let's take a peek at the market. Then we got Mike. He's worried about Qualcomm. We got to look at Qualcomm, man. I don't want Mike worried out there. It's Monday. Let's have a good week. So let's take a look here. Tesla's selling off into its earnings. Amazon, 0. Not going higher, not going lower. Microsoft, little bit of nervousness from investors as we head into their earnings. Looks like some of these semiconductor stocks are selling off. Software space is going a little higher. Look at that. Adobe's up 1.4%. CRM is up 0.67. ServiceNow is rallying a little higher going into their earnings. Apple, 1.31%. Nicely done, Apple. As we look at the other spaces, United Healthcare is down. They announced tomorrow morning before the market opens. So I'll be able to grab those earnings, and I will be covering that for sure. That's one of my big bets. But there's a lot of interesting green out there. Cisco's higher. Arista Networks is higher. IBM is higher. Utilities are higher. Walmart's higher. Costco's higher. And the energy complex is a little higher. All right. Looks good. In general, what's going on with the indexes? We got the Dow higher, the S&P's higher, NASDAQ's a little higher. All right. Looks good. So just a quick comment. Depth wish. Not ignoring your comments. If you're a member, you can request stocks to be analyzed. If you're not a member, buy a $5 super chat. I can take a look at Dell, show you a full valuation. We'll look at the fundamentals. But that is the rules of engagement on my channel. That's a method of rewarding those who are members and support the channel. Hopefully you understand that. All right. So Mike worried about Qualcomm. And I was worried about Qualcomm. So I took a look at it late last week. Like, what's going on with Qualcomm? Why the heck is this stock selling off? And I looked at it and I kind of flipped to the chart to change my mind, right? Over the 1 month, down 11%. And this has not been a good winner for the year, 9.83. But putting on my amateur technical analysis hat on, we got somebody with more expertise in Daryl, whose comments I'm looking forward to seeing. I looked at this portion of the chart and I'm like, well, that's looking pretty healthy to me. And I think the value of Qualcomm is there. It's a discounted stock. They are not in the data center. They're in the iPhone. They're in the Samsung devices. They're in all kinds of smartphones. And that market, by the way, has been doing really well. If you go back to the TSMC, the biggest foundry in the world, and you looked at their earnings, which I did, read, every single page, the smartphone market is growing really well. It's growing by 11% for TSMC. Well, that's Qualcomm. So Apple's growing their business. Well, that's Qualcomm. And Samsung's, selling more units. So is Google with their Pixel. Well, that's Qualcomm. Their chipsets are in that device. So I was worried because the market's telling me, hey, this stock is languishing. It's not getting it done. And I agree with that. For the 1 year, my capital, I was not rewarded. I was actually penalized for holding Qualcomm. But should I sell? Should I bring down my position? And the answer to that question that I asked myself was no. We're ahead of the earnings February 4th. So we are a week and a couple of days from that happening. Because February 4th would be Wednesday of next week. So I'm holding my shares. Part of the reason is, or I should say, the whole picture on Qualcomm, revenue growth. That looks good. The quarterly looks good. This is a big business. We're not talking small potatoes here. We're talking $44 billion in annual revenue. So 10% almost, over $4 billion of top line revenue growth. Look at this beautiful trend of free cash flow going higher. I do see beauty in numbers. Look at these numbers here, upward and to the right. That's what I want to see out of companies that I own. And I want to see them grow free cash flow. I want to see greater loads of free cash flow. And that's exactly what Qualcomm is doing. Now, the story that's hurting them is you're not in the data center. So you're not one of the most desirable semiconductor stocks out there. I agree, they're not in the data center. But the fundamentals, the value of these fundamentals look fantastic. So Qualcomm is a hold for me. Looking forward to seeing their earnings, and can't get myself to sell the shares because I believe that Qualcomm over the next long term is going to be a good winner. It also pays a dividend. So I'm good with Qualcomm. I'm good holding it. I understand the market's, not liking it. But let's hear from Daryl on Qualcomm. What do you think, Daryl?
Well, this was a small position for me, so I went ahead and sold it. It's really, I'd rather have my money someplace else. They had been on an uptrend since April lows. Then they broke out of that trend channel. I probably should extend that trend channel out a bit. They broke out below that trend channel, and we can see the pretty precipitous decline here. And I think these shares are in distribution right now. It's not in consolidation. It's not in just a downward trend. It's in distribution. So I think institutions are getting out of this particular holding, and I didn't want to write it down. I did manage to squeeze out just a small profit before I closed it, but I don't want to write it down. So that's why I closed it out. So this one, if you watched my video yesterday, Mike, I don't know if you did or not, but these companies can be in an uptrend, a downtrend. They can be in accumulation where institutional buyers are stepping in. UNH is in that position. CNC is in that position. And then you can have them in distribution. And Qualcomm, I think, was the only company that I reviewed yesterday in my portfolio holdings that was actually in distribution mode, not just a downtrend, distribution. And that's a more powerful trend because institutions are moving out of this holding, and I just don't want to be there. So January 12th, we got a sell signal in the PPO. On January the 9th, we got a sell signal on the RSI. So you have two indicators that are confirming a downward trend. Look at the distribution that's occurring. So this is pretty steep distribution. It's not being accumulated. And the money flow is about as strong as I've seen negative. Let me go out maybe a couple of years. Yep. So it's a strong downtrend as it's been since August of 2024. So I just don't want to be there. And that's why I stepped out. If we go to a weekly view, they have a sell signal probably around the same date as we got on the daily view. And the weekly view, we got a sell signal on the 5th of January. So once again, in the weekly view, we have two indicators confirming that we're in a downtrend. And this is a 3-year chart. We can see the distribution has been pretty steady since the max was in May of 2024. And we can see over a 3-year period that most of the time we've spent in negative money flow since about the September of 2024. So I'm not going to fight the tape on this one. I'll just wait and see what happens with this one, because this has one of the strongest signals to the downside that I saw in all the charts that I reviewed yesterday in my video.
Well, Qualcomm has certainly caught everyone's, I guess, my attention, Mike's attention, your attention. And it's good to be critical about stocks that we invest in, right? And just reanalyzed and make sure that, we're taking everything into consideration. Stock investing is not perfect, perfect science like math, right? You arrive at an answer. You can prove that answer is correct. And that's what's great about math. And stock investing is one where you have to theorize, you have to make a call, you have to take all that good information into account and then make a decision. My decision is to hold Qualcomm. We'll see how it plays out. I have I believe that Qualcomm will be priced much higher over the next year to 2 years, and that's why I'm hanging on to it. But understand that, hey, the charts are saying something else. Investors are moving away from Qualcomm. Interesting. All right, so the market is trading higher. Dow is higher. S&P is higher. NASDAQ's higher. As we look at the heat map, Meta's on a nice little 1 week rally. Man, hopefully it's not Intel all over again. It better not be. I don't think Intel and Meta should be in the same paragraph. So I think good things are brewing for Meta. And they got sent to the principal's office 3 months ago. And I think after writing on the chalkboard, will not overspend in the data center like Bart Simpson. 1,000 times they've agreed they will not spend too much in the data center. And if they come out with earnings that basically say, hey, we're growing our top line, we're profitable, look at all this cash we're producing, investors are going to be like, all right, that's the Meta we like. Keep growing your core business and then tell us how cool those Meta glasses are. And then tell us how you're monetizing Threads, which is one of their new apps. One thing that kind of is maybe overlooked is back when Elon Musk kind of tried to do a power move on, and I think he ended up doing it no matter what, was he took Twitter, rebranded it X, and he said, hey, I'm going to charge people for getting verified, which I get it. It's a generation of cash. It's kind of, hey, it's not completely free to be a part of it. And it rubbed a lot of people the wrong way. And Meta took advantage of that sentiment and started Threads. And they successfully now have a business, one more business for Meta to take on and work with. So that's cool. Good job, Meta. Other things, Apple is trading higher, looks good. Broadcom trading higher. Utility space is higher. And looks interesting. So we got a higher market. So looks like Zealy wanted to look at App Lovin. So let's take a look at App Lovin. I think he wanted to look at the valuation. Good morning. Could we have technical analysis on App Lovin? So he wanted to jump right to the technicals on App Lovin. Do you need a minute, or are you ready to hit App Lovin?
I could probably get right on it, but I'm making a purchase here. So,
all right, I'll give you a minute. I'll take a look at App Lovin. So App Lovin, look at that, rock and roll. Love what I'm seeing there. I should decide to sell stocks more often. I decided to start selling Fortinet because it was just kind of exuding the wrong trading kind of patterns. And App Lovin, I owned more in communication services than any other sector. And it was it's 24% of my portfolio. That's pretty heavy, right? That's Google Alphabet number one, Meta number two, AppLovin and Reddit are close to each other, but those are three and four. So I decided, AppLovin's been trading lower. So maybe it's a time to kind of lessen the load here with AppLovin. I started selling shares late last week. I still think it's a terrific business. I just wanted to lower my exposure to AppLovin and most in the communication services space. So now the stock's rallying, which is the same thing that happened on Fortnite. I started to lower my share count and it started to rally higher. So it's like, what the heck? So, I mean, if this thing's going to start to rally higher, I might need to stick around a little longer and keep my position for a little longer. But I'm really liking the rally today. When we look at the AppLovin business, there's a lot to like. Starting with, look at this revenue growth, 98%. And we looked at the trade desk earlier. So it's important to kind of see the different peers in a marketplace. In the marketplace of ad tech, the companies that are helping businesses advertise on Netflix, on Amazon Prime, Facebook, TikTok, you name it. These businesses help organizations spend online on advertising. Well, these guys are killing it, just getting it done. Beautiful revenue growth. Just this is a big entity now, right? When we look at, well, they're growing fast, but did they make lots of money? You betcha. Almost 80% gross margins, profit margins of 44.8. You better believe they make money. They make money in stacks, big, thick stacks of cash going to that balance sheet, making that balance sheet even better. So these numbers are just absolutely beautiful. And when we look at their growth, it's supposed to continue here in 2026, growing by 37%. Next year, 27, followed by 27. These are fantastic numbers. Okay. So these are terrific numbers. Their PE ratio coming down to the teens. It's not going to come down to the teens. You kidding me? If you have a fantastic business like this, it should be in the mid 20s, and maybe they have the excuse to meet in the 30s because they're growing so darn fast. My valuation of AppLovin shows that the stock is a good stock. And let me keep doing my searches here. Discounted by 38%. I agree with the analyst. So it's discounted. It's a really incredible growing business. I'm a holder of AppLovin. The only reason I was beginning to sell shares is that I wanted to lessen the amount I have in this sector here. Here's my portfolio. Communication services is 23.5%. That's the biggest allocation of capital to one sector. So I wanted to bring that down. But hey, you know what? AppLovin is showing up ready to play on a Monday. Last week of January saying, hey, man, you better not sell my stock because I'm moving higher. Looks good. All right. Over to you, Daryl.
Okay. So they are consolidating right now and have been, I would say, after this really strong uptrend up until about the 26th of September. They set a resistance point at around 746. It's tested again in December and again at the end of December. So it has come up and tested that level 3 times. And then I'm seeing a support level right around this gap right here. Do you see this gap up? So I've set a support level right at the day before that gap occurred. And I can see that it came down and tested it to the downside on the 23rd. So that was Friday, and they're trading a little bit higher today. So the 50-day had been flattening out. It is decreasing ever so slightly. The 5-day moving average, they've basically been riding that average down. Today they're trading slightly above that average, so that'll have a tendency to start bringing that average back up, which would indicate a very short-term reversal. The 21-day is declining, and it crossed below the 50-day on about the 20th of January. We did get to an RSI of 30. Between 40 and 30, I think things are pretty weak. Between 60 and 70, things are really strong. And between 40 and 50 is, kind of in neutral territory. But I like to see them hold at least the 40. They broke and dropped all the way down to 30. They dropped below the 40 here. For a short period, didn't quite get back down to 30. The last time they were at 30 was back in March before or during the sell-off before the tariff announcements. So we did get a sell signal in the daily view at the end of December. And the histogram bars have seemed to peak out and getting a little bit smaller here. So I think we're starting to get somewhat of a reversal. It'd be nice if they can continue this trend for a couple of days where they're trading a bit higher. Accumulation really shot up in September and has been holding fairly steady. If we look at it in the weekly view, we didn't get a sell signal. Well, we could probably call this a sell signal back on the 13th of October. Because we never really did get a buy signal. So we've been in a continuous sell signal until that point, even though it got a little close here. But the sell-off continued to extend. And this is a 3-year period. We can see the accumulation is very high. In the weekly view, we've only had a couple of weeks there where it was in negative money flow. And then back before the 17th of April, we were in negative money flow. The RSI is holding up better in the weekly view, so they didn't quite get down to 40. It looks like they got down to about 45. If they cross up back above 50 in the weekly view, I might be tempted to step back into this one. I don't own this one, by the way. I'm just talking theoretically here. What I'd really like to see is on the weekly view, and this moves a lot slower because it's weekly data. It ignores all the daily ups and downs of a stock, but it's actually in bearish territory. I would like to see that pull up and maybe stay above the 0 line, but it doesn't look horrible right now. It looks like it could maybe find let me go back to the daily chart. Yeah, if it can hold this line for a couple days, I would feel more comfortable because it's been trading between these two levels for a few months. So it's looking like it could be forming a bottom.
Looks good. Thank you, sir. All right. So moving along here. So Paul wanted to know on Microsoft. Let's see here. What is the question on Microsoft? Let me revisit that. So any pre-earnings predictions? Thinking Microsoft will come in hard this week with a nice rally. So Microsoft, hasn't been a real successful stock for the past year. Up 5.6%, which is not really all that great. And the 1 month has been caught in kind of a little bit of sell off. Hit a peak here at $541 per share. It just kind of like strategically high level. Microsoft, where does their revenue come from, right? They have their software business. It's a very well established software business. That's a little bit of kind of set it and forget it kind of business. It's growing well. They're trying to make it more exciting with their whole Copilot. Now that has struggled. Okay, that could be a topic that sends a stock down. Now, other businesses they have, the other business that is flourishing is their cloud infrastructure business, their Azure business, and that's been doing really well. I think that topic could send the stock higher. If they show that, hey, you know what? We're not having to spend as much in capital. Let's take a look at where their CapEx is. So this is their statement of cash flows. And we have cash from operations here. And look at that cash from operations. Jeez. Is this even legal for a business to make this kind of cash? It certainly is. United States of America. Capitalism works. Look at that. Wow. Now, you see CapEx. Now, this, we don't like to see this grow. Okay, this is upside down. And you see that, hey, AI became a thing and they started just pouring money into that data center. But you see that it's kind of plateauing. So I think what could send the stock higher is if they say, hey, good news, everybody. We're still going to grow. We're still going to grow our cloud infrastructure, but we're figuring out how to do it less expensively. We're doing it with less expensive semiconductors. And we're going to be able to continue to grow and expand our margins. That'd be fantastic news, by the way. So that's where I think we're going to see a lot of focus with their earnings. If we look at their forecast, this is a massive business, humongous. This is the year we're in. It ends June 30th, 2026. They should do 333 billion, growing at 18%. That's close to $60 billion of top line revenue being added to that income statement. And next year, it's going to be pretty much about the same numeric value because each year they keep getting bigger and they keep growing. They're going to be $500 billion revenue company in 2 years. Their profitability is growing. So this is just a high quality business. When you look at businesses based on credit rating, Microsoft is near the top of the stack. It's one of the best businesses. When you look at their bonds, if you buy bonds from Microsoft, I own Microsoft bonds, some of the best credit profile, one of the best credit profile companies you will look at. So my best guess is Microsoft's going to trade higher because they're smart over there, okay? And they are reading the tea leaves, listening to the market. The market's saying, hey, we love this whole AI thing, but we hate when businesses overspend in that data center. So don't show up and tell us you're going to overspend in the data center. Now, it's not highly discounted because the stock was bid up for a couple of years. So there's a 12% discount, in my opinion, on Microsoft. And I'll update my valuation on Wednesday when we hear their announcement. So I'm thinking Microsoft could go higher. Can it go up 5% higher? I don't think so. I think maybe up 1%, 2% higher is what I would expect. But that's my best guess. And I want to focus on the word guess. I did all my analysis, but predicting where stocks are going to move on earnings, that's a guess. What do you think, Daryl?
So I put an auto support resistance line right where I have it here at around where it touched a couple of days ago. And the reason I have it there is it touches that point, that point. It rose above it a little bit here, but that seems to be a pretty good place to have that line. Then I'm going to just step into 1 year. Whoop, I want to step into a year and a half because I want to talk about their previous earnings. So here was their fourth, well, I don't know what fiscal quarter they were in, but it was the reported in January of last year. We saw a little bump in the price, and this was when tech and a lot of other companies were kind of peaking out. Started the sell off in February and March, and then we got to the tariff announcements. But when they reported, they were up a little bit and then came down. When they reported their next quarter earnings, they shot up about 7.63%. And this one, continued on quite a run. And then when they reported earnings 2 quarters ago, they shot up 3.95% and then sold off. Their next quarter, they went up 1.98% and sold off. So we have 3 sell-offs and one that continued to run higher. So we did come down and touch where I set this auto support resistance line. That gives me some encouragement. I think I have a intrinsic price on them of around 424. I think it's a little bit less than where they found support here. So now I'm just going to step into just 1 year so we can focus on the current averages. So the 50-day did cross below the 200-day. You guys remember what that's called, right? Called the death cross.
Oh,
And
you used the witching day, triple witching day earlier.
Yeah. So anyway, this is they like these scary terms for these things, but it's when the 50-day crosses below the 200-day. So the 50-day is declining, the 200-day is still increasing, the 21-day is decreasing, but they are testing that price today at 468. That's about exactly where the 21-day EMA is at. I do see the RSI is above 40. That's good news. It looks like we could get a signal line crossover here in the next day or so. So they are getting, this is in bearish territory, by the way, but they are getting closer to a buy signal than they've been in quite a while, I would say. Money flow is pretty neutral at the moment. Accumulation still looks pretty good, not quite the high that we had back in July, but we're not far from that at the moment. So hopefully this is the quarter where they've, think investors are concerned about the capital spend overall by a lot of these companies. So either they need to prove that they're getting revenue off that spend, they're becoming more productive from that spend, so the investors can feel comfortable driving this one higher. And they're not far from intrinsic value, so I own Microsoft. This could be the quarter they run a bit higher. It just all depends on what they report.
And one thing I would say, my valuation didn't show a big discount, but that can change. That can change if Microsoft says, "Hey, we are going to not need as much capital." Well, if you give me another chunk of cash and you put it into my modeling, I could see discounting really come my way. And that's why their comments around how much they're going to spend in that data center really changed the valuation, the sentiment, the momentum. So Eyeballs are on Microsoft on Wednesday after the market closes. We'll see what happens. We're going to move to Target, which is a stock that I think is a fantastic opportunity. It's selling off today. And before I do that, let's take a peek at the market. So we got some green on the screen. We got Adobe moving higher. I picked Salesforce. So see, when Tomas puts me in the hurt locker, sometimes the result is not what we wanted. But all kidding aside, they're both fantastic. It's good to see them both higher, but it's good to see Adobe higher. And Intuit late last week was up substantially. I think they're going to really do well. Tax season is really pretty much started, and they do tax software. Computer hardware is doing well. Look at that. Arista Networks. Dell is moving a little higher. Meta up 1.34%. Man, don't set me up for a disappointment, Meta. It's looking good, looking real good. Nicely done. And utilities still standing up nice and tall. So I'm sure a lot of electricity is being, and maybe there was a little bit of a, I haven't heard of many stories where utility companies are dealing with a lot of destruction due to this storm. Have you heard of any stories like that with this current storm?
I have not.
And that's what might be the good news. No news is good news for utilities, where I know in California, as an example, we deal with those wildfires, and geez, oftentimes the utilities are involved, and that's not good for anybody. But I'm just kind of pointing to that example. When huge storms like this happen, is it going to hurt the assets, or is it going to damage the assets that these utility companies have? If the answer is no, okay, then that's kind of a risk factor taken away.
Victor, I need to step away for about 3 minutes. I'll be right back.
Got it. All right. So Target, let's talk a little Target. Let's talk a little bit, and it's listed as a consumer staple. Now, I agree and disagree at the same time. I think it is a staple, but I think it's also has a lot of discretionary products in its stores. I mean, you can go in there and buy a nice TV. You can buy appliances, not appliances, more like cooking small items like coffee makers, all kinds of stuff like that. You could also buy your pet food, premium pet food, by the way. And you can definitely buy your staples there as well. You can buy your apparel. You can buy all kinds of stuff at Target. Now, I like Target because it's so darn discounted. It starts with what am I buying and when am I buying it? Target for a while was a pretty good stock to be an investor in. Look at that rise, huh? And it used to really take it to Walmart. Walmart was perceived as a less desirable place to shop and less desirable stock. But the tables have turned. Now Walmart's flying high and Target's been in the dumps. This is a $47.6 billion market cap company with revenues more than double their market cap. Whoa, that's interesting. P ratio of 13.7, pays a PE rate, a dividend of 4.33%, and they can afford that dividend. So I'm not a dividend investor, but I acknowledge that this type of dividend is going to attract investors that see, hey, this thing's beaten down. Can it go any lower? Well, you can understand why it's a little beaten down. It's been contracting. They had a boom 2021. Boom continued to 22, but it hasn't had very good momentum in the rear view mirror looking at the last couple of years. And when we look at the quarterly, it's pretty much the same news. Now, what I'm hanging on to is this forecast. We've got 26 analysts, so it's not a small data set. And these analysts think it's close to fair price, 4%. But this is what I like. Green on the screen. Okay, we're going to start the new fiscal year in 1 week. And this fiscal year starts, I guess it would be February 2nd and end February 1st, 2027. We have this rear view mirror stuff here, right? These fundamentals here, rear view mirror, it causes stock to go down. When we start looking at through the windshield, looking forward, if they hit this forecast, I'm good with Target. I'm good with the stock because it's going to start increasing its profitability. It generates good cash flow, has a super low PE. Its rival company is Walmart. And the two stocks are very different valuations. Walmart's been increasing its stock value or price quite dramatically. It's almost $1 trillion in market cap. So Target to me is an opportunity. I actually bought shares before Mike put his comment in the chat. I am accumulating Target. I'm building it up. I think I'm at about a 1% position at this point, and will look for their earnings to tell me, is the forecast that I was showing accurate? Are they showing the path? Like, hey, this is our quarter. This is how we're going to guide for the next quarter that's coming. And if it's in that path, I'm going to move it from 1% to 2% of my portfolio. It's a discounted stock. I use a higher discount rate because they're in a period of time when they're improving the business. So overall, Target, I view as an opportunity. That's my story on Target. So far, so good. It's had a decent month. And, it's a decent month, but, I don't invest to get in and get out in a month, especially not like a Target. But I have made it a good habit of finding stocks that are good businesses that have been sold off. Market's thrown them out. Don't like them. Don't want to see them anymore. Now buy them at the right time and make money. That's one of the recipes for success. Let me turn it over. You got any charts on Target? Love to see those.
Okay. So this is 5 years worth of daily data, and we had drew some trend lines that started at about the 25th of April of 2022 with this downtrend. And then we have a shorter term downtrend that started in 19th of November, and they came back up and tested that right here, but they have broken out above that, and they've broken out above their 200-day. I'm going to go to just 1 year now. So they broke above that trend line, the 200-day moving average. They did come down and retest that on the 23rd of December, but it's pretty much been no looking back at the moment. We did get a 50-day crossover above the 200-day. That's called a golden cross. So unlike the death cross, this is a golden cross. They are testing or getting pretty close to their 21-day moving average today. And that seems to be peaking out just a bit. So after this run, we might have a bit of consolidation. But Victor, I think you're right. It is starting to break out above. We're getting trend lines that are actually moving up instead of down after 2 or 3 years of doing that. This looks like a pretty good opportunity. We can look at some of these other points if you are thinking about entering where do you want to set your stop loss in case it breaks down below these levels again, right around 84, which it has done 3 times this year. So where do you want to set your stop loss? You have to decide on that, but I would look at some of these prior levels to see where I might do that. But it looks like a good opportunity at the moment. At least they're seem to have reversed this downtrend and things are definitely looking better. They are dropping below a 60 RSI today. They had crossed above the 50 line on the 25th of November. They came down and tested that once or twice. So hopefully they can hit this 50 line once more in this sell off. Well, I mean, sell off. Let's not call it that. We've had a few down days here. So let it come down and consolidate and get back to this 50 line. If it can hold that, that would be pretty awesome. We do have a sell signal in the daily view on the PPO. We don't quite have confirmation of that in the RSI. So when that drops below 50, if it sustains above 50, then I would consider that a valid signal at that point. We do have accumulation in the stock since about the 20th of November. So after some distribution back in August, all the way until what I consider not quite a 52-week low, but pretty close to it. And now we're moving back off of that. Money flow is currently positive. If we take a look at the weekly view, they're clearly still in a buy signal and have been since the 20th of October. The RSI is just about the drop just below the 60 line. So once again, this would be something to watch. Can it hold the 50? It has gone completely below the 40 as recently as March and April of last year, as most companies did because of the tariffs. So it did get down to 30 back in September, early September of this year, but it hasn't been below 40 RSI in the weekly view since about the 13th of October. So it's looking pretty strong in both views. Just risk manage your position.
All right. So we've got a question for you, sir, from Paul. This one's, I consider it kind of a tough one, which is, do you have an entry price for SLV silver? Paul's
Yeah,
thinking
about
of swing trading.
$30 a couple years ago.
All right.
No,
I thought it
I'm
was tough, but you made it look easy.
yeah, I'm joking. Wow. When it's on a run like this, I don't see the 20 line coming. If it comes back down to the 20 or 50 line, then this whole trade is probably reversing. Although it did do that back here, so it did test the 21 day, came down and tested it there and went on a run, but this is all-time highs for silver. So if I were trading this, and I don't, but if I were trading this, just manage your stop losses. I could buy it today and just see what happens over the next couple of weeks, but make sure you have some tight stop losses in place. I have bought at all-time highs. I bought Nvidia at all-time highs. I bought Costco at all-time highs, and those have done very well since I've done that. So I'm not afraid to buy them at all-time highs, but I don't have enough knowledge in this area to really uh, make a decision. But I look at charts all day long, and if you see a chart like this, buy it and set a stop loss.
It's not early in the silver trade, okay? It's not early. It's gone from like 16 to almost 100. Jeez.
What's interesting is the CME and CBOE, they've been tightening up margin requirements on this, and it continues to still go higher.
Man.
So they're
Well,
trying to slow this trade down by tightening margin requirements, and it just keeps pushing higher.
well, I've seen that picture before. I've seen that movie before, excuse me. And it doesn't end well. It just doesn't. It in FYI, there's money to be made if you are running, if you're seeing your investment run up higher in value. Congratulations. Um, and we'll leave it at that. All right. So it looks like Ben 10 wants to look at COF. Let me take a peek at that. So COF. Capital One. Now, Capital One, I think, was under some pressure because the government started talking about, hey, we don't want you to charge these high interest rates on credit cards. I'm imagining that's what put pressure on Capital One. And over the 5 year, this has been a good stock. It's really gone nicely higher. And especially the 1 year. Well, no, 1 year doesn't look good. I thought it was going to look better than that. This is a $137 billion market cap company. They're principally the credit card issuer, right? They partner with I don't know if they partner with companies, but Capital One is a big credit card issuer. Forward P of 10.8%, small dividend of 1.46. Analysts think there's a discount. I don't know that I have Capital One in my valuations, but let's take a look later. So net interest growth, look at that. Looks really good. So interest on loans, investments. So it looks good. Growth has been really good. Very good. Very good growth. Okay. Now, when we deal with institutions like this, banks and so forth, we got to look at the book value, make sure that's growing. Let's take a look. So book value per share has been growing nicely. Very good. That looks really, really good. So two things that look really good. What's my price to book on this? Big banks are at 1.7 is like the average. And where is price to book here? I think I passed it. Price to book ratio 1.26. This is a very attractive ratio. For example, the average is 1.7. If you go to JP Morgan, you're paying 2.6 or 2.7. This one's worth taking a look at, a closer look. I could work on that and let Daryl take a look at the charts. Let me take a look at the forecast real quick. Now, the story that is kind of putting a wet blanket on the stock is the government stepping in and saying, hey, we don't want you to charge these high interest rates on credit cards. That could put handcuffs on their business. Right now, we're dealing with this year. And why is it? This doesn't seem like the right data. Are they acquiring somebody?
Yes.
Who are they acquiring?
Discover.
Ah, that's a good idea, by the way. That's a really good idea. Okay, good. All right. So let me kick it over to Daryl and I'll try to make sense of their valuation. Although it may not be possible because, man, these numbers are going to be tough to figure out with this acquisition, but I'll take a look.
Okay, so we hadn't ever looked at this one before. I didn't have a chart saved on it, but I drew a quick trend channel. So this started in 2023 in the last quarter. I have it connected to 2 points here, made a copy of it, drug it up to the top, connected as many points as I could, and maybe I could get a better fit on that. Let me see if I can get a better fit. Yeah, I think I probably can. I think I'm going to leave that there and then pull this middle line down just a little bit. So this just helps me visualize how they're trading over a period of time. So they came down, we have it connected to these 2 points, and then I tried to connect as many points as I could on the top line. When I had it up here, it was only touching just a few, but here it's touching many points, even though it went above it here. I still think this is a little better fit. So they're trading just below the midpoint of this channel. Let me go to just 1 year now. The 200-day is upward sloping. Let me save this so I don't lose anything. The 200-day is upward sloping. The 5-day is declining. The 21-day is also declining. The 50-day is still increasing at the moment, but looks like it could begin to roll over. So I'm looking at some support, which would probably be down here around 203. I don't know if they would get all the way down to the bottom of that trend channel, but they did in April, although that was somewhat of an anomaly. So I don't think they would necessarily get to that point, but I wouldn't be surprised if they continued this downtrend to about 200 or so. That would be where I would get in. If I wanted to own this one, that would be where I would be interested in maybe picking them up. They've been on a sell signal since the 9th of January, and that's really confirmed by the RSI also being below 50. They came down and tested the 40, went back to 50, tested the 40 again, didn't quite make it back to 50, and now they're below 40. Let's look at them on a weekly view. We did get a sell signal last week on Monday on the big sell-off. Accumulation still seems to be pretty high over 3 years. The RSI didn't quite make it down to 40 and looks like it's making its way back higher. But I think I would wait for that 200 level is what I'm thinking.
You also have, the merger, which, I mean, it's not a, perfect line and perfect process. So you may see adversity due to that merger. I'm right in the thick of trying to figure out what their value is. And let me take you through the final steps here. So the average price to book for big banks, 1.73. I put in their book value in here. And a fair price based on book value is $300 per share. Stock's at 220. That's looking good. Now let's update the earnings per share. And this is for, this is tricky because they're about to acquire Discover. Man. Okay, so because I'll have to use their forward earnings per share because the market's considering it. P ratio, and I'm going to go with the average for big banks. And the average is 14.34. So the growth rate, so they're going to grow in the next full year by 21 and then 8. So 14% growth rate. So Capital One, based on their earnings, is discounted by 36%. when we combine the two, let me make sure these numbers are correct. Market cap. $15 discount if we compare its value, and it's just not enough. There's too many things going on. I wouldn't want to invest in kind of a cloudy picture stock, but it is an interesting stock, by the way. I think the acquisition of Discover is a good idea, and I would wait to get an earnings or two and look at those fundamentals, look at those financial statements, and then update this valuation for Capital One. So good one to ask about. I'm glad you asked about it. I wasn't tracking it before, but I'm going to add this. And for you super and advanced members, this will be in the terminals that you guys have access to now. And I would really be curious to see where this one's going to trade going forward. When's it going to announce earnings? So these guys, they already announced earnings, January 22nd, huh? So they just announced. And man, they're growing really well. Look at that. Yeah, looks good. I see a lot of positives, but man, it's a cloudy picture. And it hasn't been doing great recently. I think mostly the news stories around how the rate charged on credit cards is going to be capped. That could really hurt them. That could hurt that beautiful growth. So for now, I would just not invest, but really follow the stock. So thanks for asking on Capital One. All right. So let me get back to the chat here. It's been blowing up a little bit. Ben 10 want to look at BATL. We're going to look at that next. Let me catch up on the chat here. Mike wants to look at Zeta and AMD. Put those on the list. Mike's got physical silver. Good for you. Ricardo wants to look at Celsius and Coca-Cola. Celsius, man, it looked good when I last looked at it. And let's see how it looks now. All right. So we got a nice active list here. Let's get cracking. All right. So looking at BAL. So did I write that down right? BATL, sorry. Battalion Oil Corporation. Interesting. Battalion Oil Corporation, an independent energy company, engages in the acquisition, production, exploration, and development of onshore oil and natural gas assets in the U.S. Okay. So this is a small cap. Wow, 73 million. Whoa. Yeah. So some news caused this stock to go from $1.28 to now $4.50. Wow. Okay. Super small cap, micro cap. Maybe it was announced that they have ownership of some mineral rights and some bigger company wants to buy them. There's got to be some news on this one. Uh-huh. So looks like they got some agreement that is probably, it was a risk of going bankrupt, but now they're not going to go bankrupt. Something like that. And I'm just speculating. I have no specifics on it. This is an incredible stock going 243% in a day. Look out, everybody. Check this out. Geez. Revenue is up and down based on oil prices. Have they been making money? So they've been losing money for 3 years because of oil prices. And in general, most years they've lost money. So it was just a beaten down stock that the news is really moving the stock higher. So interesting stock. I can't value the stock because they're losing money. I don't think they're producing free cash flow. Let's take a look. Yeah, they're burning cash. So I'd get to a zero. So and I don't think the charts are going to help us any on that one, right?
I don't think so.
Yeah. So I had a small position and a few hundred in and went up. Nicely done, Ben 10. Good job. Jump shipped on gains. Good job. Very good job on that. All right. All right. So Zeta, what's going on with Zeta? So Zeta for the last month had seen a nice little rise. This is a competitor to AppLovin or the Trade Desk. They are smaller. It's a omni-channel data-driven cloud platform, and it's ad tech. That's what it does. Yeah, marketing platform. Yep. $5.26 billion market cap. Its forward P is 25. Analysts think it's discounted. Over the 1 year, it's done decent, 14.5. And I like where the stock's headed. That looks good. Growth has been fantastic. The most recent quarter, not as fantastic, but still very good. And taking a peek at gross margin, 60%. They're not profitable. They're growing. They are still relatively small compared to the likes of AppLovin. We've got 12 analysts saying it's discounted by 25%. They expect this year it's going to keep growing nicely at 32% growth in 2026, moving to 14 and then 7. So if this is in fact what's going to happen, I'd just be aware of this because I don't know if the stock's going to go higher if it becomes a slow grower because it's still not going to be real big. And the forward PE, that's why it's dropping there. It's still very sensible PEs, by the way. If they grow at this rate, there's going to be a lot of good news. The stock should work in 2026. It's phenomenal the way that they've been growing. So that looks good. Let me take a look at their valuation. And I think they're nicely discounted. So Zeta is a very good looking stock. I think it's going to perform well this year. If they hit that 32% growth, there's going to be a lot of earnings reports that have positive news. And those big numbers, those big growth numbers, that just looks really good to investors and has decent margins, good cash flow. So Zeta's looking pretty darn good there. What do you think on Zeta, Daryl?
I am updating the chart at the moment. So we had looked at this one before, and we had only this one downtrend line connected to these 3 points. It did break out above that. I just added this upper line and connected it to the high that we just saw in January. So we'll kind of use that to monitor resistance points. So they've been in a downtrend for quite some time. Let me go to a 1-year chart. They had been on a shorter term uptrend, and they basically tested that level a couple of times. They are trading right at an upward sloping 21-day. The 5-day has stopped going down and is turned upward for the moment. 50-day looks like it is starting to level off a bit. And the 200-day, after months of declines, has also somewhat bottomed out and starting to move in an upward trend. And we had the golden cross on this one in September. So they were in an overbought condition when it was reaching this peak here. They have come down, didn't quite get to the 40, made it back above the 50, and they're currently trading above the 50. And we did get a sell signal on them on the 15th of January. That has not yet reversed. Money flow is still positive. Let me look at this one on a weekly. Let me save this first. So on the weekly, they did get a buy signal on the 29th of December. And in the weekly view, they really haven't been below 50, the exception of a couple days since about the 14th of June. So we do have a buy signal here. It looks like it could turn into a sell signal if the price continues to go down. If they continue to go up, then this will become a much stronger candidate for buying because the PPO could get a lot stronger. It is in bullish territory at the moment and indicating a buy.
All right, looks good. So the next one up is Advanced Micro Devices AMD, and they've had a fantastic year. Look at that, 105%. A lot of good news. There's partnership with OpenAI, I believe, and that's what caused the stock to really become exciting. It kind of pulled back from that, but now it's going higher again. So it looks good. Today it's having a down day, but we'll see. I think this one is going to be a stock that's affected by the news that Microsoft and other big consumers of semiconductors announced this week. And we'll see. We'll see if it goes lower or higher. The stock, its fundamentals look good. The growth looks fantastic going forward. These are really good growth numbers. This year, grown by 32%, 40, 27. So this shows like they're just going to keep growing. Again, the data center companies, they could change this. I don't know that it could get better, but if they were to say we're going to, take the foot off the gas pedal, this forecast could change very quickly, and the stock, which has flourished, could really go down. I have a good discount available on AMD of 19%. It's still discounted because it's growing so well. So you're sitting pretty. If you bought this stock well over a year ago, you're sitting in a really good spot. And nice work if you did put this in your portfolio. What do you think of AMD?
So last time that we had looked at this, we had some downtrend lines, and they've managed to break out above all of those. Let me just go into just 1 year. So they did reach a high on the 29th of October, and that was before the sell-off in the tech titans. They are coming back and getting close to that resistance line once more. The 5-day is moving up pretty solidly. Looks like they trying to test that a little bit earlier. That's the 21-day is moving higher. The 50-day looks to be somewhat flat, and the 50-day is moving higher. They were overbought for the last several days. Looks like they pulled back to 68, so that gets them out of an overbought condition. Looks like they've been in a buy since about the 13th of February, according to this signal right here, or indicator. And it also crossed above the 50-day RSI. So you had two indicators telling you that it was a good buying opportunity. The money flow is somewhat neutral at the moment. I would say accumulation distribution seems to be pretty flat. It spent about equal times above and below in positive versus negative money flow.
All right. Thank you, sir.
You're welcome.
So Ricardo was asking about Celsius, and I updated my valuation of Celsius on December 20th and felt like, hey, this is a pretty good looking situation. It had a really good discount then. The stocks moved higher. So the things I liked was the growth rate, growing faster than other beverage companies. And now when we look at where the stock has gone, if we look at this is roughly December 20th, the stock was trading at $42.80. Now it's higher. So looking good. Overall, this stock's gone higher. Now, a good part of that discount has now been consumed by a nice price appreciation. But it shows that, man, this stock was in a good spot. And for those who bought in this range, you are being rewarded. Right now, it's discounted still by a little bit, 16%, and looks good. So, congratulations if you're a Celsius investor. And Ricardo also wanted to double down on beverage, Coca-Cola. I'm not a big Coca-Cola investor. Others are. 50% rise in the stock with the dividend being paid. So it's a pretty reasonable investment, right? And it's a consumer staple. Just not overly excited about a business like this. And looking at their forecast, this year they're supposed to grow by 5%, 4% next year, and then maybe have a little trouble growing in a couple of years. So that's slow growth. And of course, the most famous Coca-Cola investor is Warren Buffett. He owns Coca-Cola. I think Coca-Cola is priced 31% too high because it just doesn't generate cash. It's like you got to generate cash to be a business that I really favor. And Warren Buffett, of course, he invested a long time ago. So his acquisition cost is way low. But for me, Coca-Cola would be a sell. I thought Celsius was a good idea on December 20th. Now, I don't know that I jump into Celsius. It's just been bid up a bit, and would probably want to be careful not getting into Celsius too late. But if you're in Celsius, you did a good job. You invested at the right time, under the right conditions. Good job. All right. You want to take a look at the charts for Celsius and Coca-Cola?
Sure. So I agree with you. It's starting to get a place where I consider we're going to be facing some resistance. So if you bought it back here, congratulations. I don't know if I would necessarily chase it here, maybe for a few dollars, but that might be the extent of it if they can't break above these prices about right where I'm got my crosshairs. And then KO, I don't have a chart on that one, but we'll look at it real quick. Yeah, it's basically consolidating. I would call that. And they have been on a pretty good run here recently. They had got pretty much to an oversold position. They did get back above the 50 RSI on the 8th of January, and we had a buy signal on the PPO on the 12th of January. Money flow is positive. Let's go back maybe a couple years. Yeah, so it's already above its previous highs, so I don't know how much more it can run here.
Yep. All right. Looks good. So the next one we're going to take on is Duolingo. So my last update on Duolingo is on January 2nd. And back in January 2nd, I'm going to take a look at where the stock was trading, but I'm real positive on Duolingo because I think Duolingo, along with other businesses, is kind of being put in a box of, hey, this stock's going to be disrupted by AI. It's going to be hurt by it. And the stock's discounted by 41%. When we look at the charts, the stock hit a recent high in May, and is down from $540 per share down to $151. And if you really measure from that point to where we're at now, that's way above 53% in depreciation or price contraction. $7 billion market cap. This is a small cap. And it's a small revenue company, less than $1 billion. Forward P is 19.45. Analysts believe 80% discount. This is a big discount. All right. AI is supposed to be disrupting these guys, supposed to be destroying their business, taking it away. OpenAI is going to do everything. Now, please excuse my sarcasm. Please excuse my comments there, but let's just focus on the facts here. 41% growth, showing that this business isn't contracting. If let's just remove Duolingo, remove the name and say, hey, these guys do pure play communication services like Reddit, this stock would be flying higher. This should be taken off. So right now, Duolingo is proving that AI isn't disrupting our business. Okay, here's the data. Here's the facts. Okay, so that's item number one. Okay, so they're growing, but do they make money? You betcha. 72% gross margins, profit margin of 40%. Yeah, they make gobs of it. 36.77% free cash flow. So very profitable, high cash flow generating, growing. What's the forecast? Got 15 analysts putting themselves out there. This one is kind of a one where they got to go against the grain because, everybody believes OpenAI is going to be, not everybody, I would say, the talking heads that you see on TV for about 2 years solid. I think they're changing their tune a little bit now, but they've been talking about how AI is just going to do everything, and I'm sure it's going to do a lot of interesting things. For now, this business, we're done with 2025, but we haven't seen Duolingo report. It's expected they're supposed to reduce their growth rate, and their profits also coming down. Is it because they have to advertise more? It's still very good growth. And if they surprise to the upside, like if they guide and say, hey, we're going to keep growing at 40%, this stock's going to fly up. Now, when do they announce? February 26th, so in about a month. And man, I have seriously thought about buying this stock. It just has It's like you go to that steakhouse and they're bringing that steak through the dining hall. You see it coming toward your table. That's how I see Duolingo. The stock's just kind of walking through the dining hall. I'm not sure if it's coming to my table or somebody else's, but that's a good looking steak. That's kind of how I feel about the Duolingo stock. It's looking real good, man. And I think I'm seeing businesses, I've talked about software earlier. The numbers are proving that, hey, that theory that AI is going to disrupt software, the numbers are showing that that hasn't happened yet. Is it going to happen? Well, after each quarter, the likelihood is going down because these companies are showing, no, we're not going to be disrupted by AI. In fact, we're going to use AI and we're going to reduce our costs with it. Beautiful. Duolingo is different. They do mobile learning, and from people have told me about it, they enjoy the Duolingo experience, learning other languages and doing their thing there. Very cool. So this is looking like a buy for me. Now, the market just keeps moving this stock lower. When's it going to stop? Is it going to hit zero? Of course not. Let's take a look at the charts, Daryl. Tell us what you're seeing with Duolingo.
We'll start off in fast grass. I only have about 7 years worth of data here, but the prices back here was somewhat speculative. They didn't have any profits, so people were buying into the hope that they would be a profitable company. They finally did turn profitable in 23. They grew their earnings by a huge percentage in 24 and another huge percentage in 2025. But Fastgraphs is now saying that they're just below their fair value. So the reason I went and looked at Fastgraphs is I was looking at this chart, and I have 3 auto support resistance lines here. One is set to these 3 peaks, and we can see that it broke down below that and has not returned to that level. Then I have one connected to these 2 peaks. It came down below it just a little bit here, came down and tested it again, and went on a fairly sizable run, and here we are again. So Fastgraphs is saying it's fair value, and we're at a support resistance line that's been tested many times over the last two and a quarter years. So this looks like a good spot to me. I did draw one more just to see what the potential was for any more downside, and that gets me at about 104, connecting all of these peaks across here. So let's go just to 1 year. We have a 200-day that's declining. It looks like it's not a fast rate of change. The 50-day is declining. The 21-day is declining. It's trading below its 21-day and has been since about the 10th of December. They haven't been above the 50 line on the RSI since the 20th of October. PPO looks somewhat flat at the moment, a little bit indecisive. The been in distribution mode. To me, this seems like a pretty good level, actually. I would not be afraid to enter it at this price here if you think company is something you want to invest in.
Excellent. Thank you. So we've got a second question for you. Different stock, Chipotle Mexican Grill. from your point of view, is Wall Street rotating back into Chipotle Mexican Grill after months of being beaten up? Also, what is the fair value?
I don't know if we have a chart on them. Let me pull it up here. Okay, let's look at the fast graphs. So they're trading a little bit above fair value, but below their market multiple, which you can see for many years they've traded either at or above or slightly below their market multiple. They have come down, and that looks to be reversing. Their fair value right now would be about $24 a share at the end of 2025, and about $25 per share at the end of 2026. So they haven't reported yet. They expecting about 3% earnings growth for 2025, 5 in 2026. And then it shoots up to 18 and 20 for the 2 following years. So the 21-day is reverse course. It's going back up, as well as the 50. The 200-day is still declining, but it looks to be flattening out. They did, after this big sell-off, got back above the 50, and they've been able to pretty much hold that since the 25th of November. We got a pretty solid buy signal on them, I would say probably right around the 25th of November. That's where both of these were confirming it was a buy. And it really hasn't dropped. The RSI is staying pretty high, so it looks like sentiment is not too bad from the investor point of view. The PPO is somewhat flattening out at the moment. So it looks like the trend is generally to the upside after this big downdraft that they've had. I know there was a lot of talk about some folks, just not going there because of the cost anymore. I don't know if they're reducing some of their costs or making some changes to make it more affordable. I haven't really heard what they have in their pipeline to help with that, but that was the story there for a while.
Thanks, Daryl. And my fair value on Chipotle is $27.50. So I'm pretty much agreeing with the $24 fair value. Restaurants are not my favorite investment, but I try to value them just based on cash and profits and so forth. So I think Chipotle is a stock that I'm not running out to, buy. It's actually be a sell for me. All right, so looks like the market is doing its thing. It's buying and selling, and some notable names out there. Apple up nicely. Microsoft's trending higher. Broadcom's higher. Nvidia is under a little bit of pressure. Tesla's under some pressure. You keep running up, Meta. All right, and Google, that's good too. Google is getting a little pricey. That's my biggest position. Now, it could keep going higher. I'm not selling one share. I think it's got such a strong strategy going forward. I'm good with that. So looks good. Looks good. I like markets like this where you have, areas that are selling off, areas that are, catching a nice rally, because it shows that, hey, what, investors are moving out of stocks that are priced too high, or maybe aren't favorable, and moving into stocks that are better positions. So very interesting. All right, sir. Well, I've got to move on. I got to move on to the next thing in my Monday. It was an awesome stream. Everybody, thanks for bringing all the comments. Man, I was nice and busy. Daryl was nice and busy. Appreciate it. What's going on with your channel this week, Daryl?
Well, let me. So I did release my weekly chart review. That's probably what got Mike excited, mentioning.
Well, you really worried him.
Yeah, mentioning Qualcomm earlier. I did also release. I haven't made it public yet, but you can get to it through the Discord. I'll make it public after this call. But the RTX earnings preview, and if you're not subscribed to the channel, here's a QR code you can use to get there. It's also the handle is right here. And I can tell you that I'm working on a preview for UPS and UNH tomorrow. They all report tomorrow.
Yep.
And then I either put out reels on all of these. I put out at least a reel with the earnings highlights. And then if I have time, I'll do a detailed video with charts and fast graphs and what have you. But it all depends on how much time I have and if their earnings beat me to when I don't like to release these too early. I like to release them just a day or two early so they're the most relevant.
Awesome. Thank you, sir. And thank you for the nice comment, Mike. Really appreciate your support. And that's it for our stream today. We will be back. I'm hoping that Daryl is available Wednesday morning and we can do the same thing, same time. We'll do the same format. We've got plenty of things to talk about on Wednesday. Tomorrow, got to be a lot of earnings. I'm going to figure out what I can do to release content tomorrow. I'm probably going to stream tomorrow morning, in fact, because with UNH earnings coming out, and I think 3M, I don't know if 3M announces before or after the market closes, but there's just a lot of companies that I'm an investor in and I want to update.
I think they're normally in the morning.
Yeah, so I'm going to have plenty to do tomorrow. So look for my channel, when we schedule these out. It should be a nice active week. And hopefully your stocks are doing well, doing really well. Like that one investor, 243% return. What stock was that? That was BATL, right?
Yep.
So he could kind of, stock goes up 267. Okay, I'm taking the rest of the week off. I'm done. That's a nice one. Congratulations to that investor that's in this stock. Really nice little pickup. And that is it, folks. Have a terrific week and look forward to seeing you on the next stream. Take care.
Take care, everyone.